What up, what up? It's been a volatile week, pretty crazy week in the markets. But we're at exactly where we were at on Monday. You can see here this was the Monday candle on the S&P 500, and then on Tuesday, Wednesday, Thursday, you could see it was a 3-day decline. Pretty much whole market was going down. Everything was becoming oversold, especially the tech software. We talked about that in the last video. Go check it out. Well, anyways, Friday we got bought up. You could see this candle, pretty strong candle for the S&P 500, and we're above, closing above all three key moving averages. I'm not gonna say we're back because it's still very volatile. Volume is high. It looks like we're rolling over a little bit topish. But if we can break this, let's say resistance right here in the next coming weeks, then we could probably have that run up stage in the market. Looking at the cues, like I said, tech has been getting hit hard, and you can see here, not above the moving averages. Still have a little bit for the 9 EMA around 614. It closed around 609, but bouncing kind of at this low right here. So hopefully we remount moving averages for our tech names and then maybe start the next rally up. But if not, then we could continue getting into some resistance and then even dipping down to that 200-day moving average right here at 577. Let's go over my positions before I get into some stocks that we could enter into coming into the new week. Starting with CoreWeave, I did something rare here. I did not honor my stop loss. It blew right through my stop loss and I decided to hold. The reason why is because it looked very oversold. It just didn't feel right to sell right when it was 7 days consecutive down. You can see from the upper Bollinger Band all the way testing that lower Bollinger Band. So I don't recommend this, but I was able to hold and risk it. And it could continue going lower. So looking at hindsight, I did the right thing, but it could have continued dropping. So that's why I don't recommend it. Anyways, Friday, 20% move for CoreWeave, closing above the 9 EMA. It didn't really hold the 50-day average. It went down a little bit more, but that's kind of, I would say, it's shaking out people. Like people like me probably had stop losses. They're getting shaken out, and now we're back on trend. So I'm probably going to continue holding this until earnings in 19 days. United Airlines, strong day for the airlines. We've talked about this. This is the reason why we entered into United Airlines. If we go to the ETF jets, you can see here, strong day. Friday just breaking out. Keep travel and transportation on your watch list. Zoom, we entered here on the pullback to the 9 EMA. It pulled back a little bit deeper and tested the 20-day average and that 50-day average, but is holding that and closing back above. I'm really loving this right now. 18 days until earnings. I'm probably going to sell before earnings. Hopefully we get a little pre-earnings run up. Macy's is a new trade. I haven't talked about it on YouTube yet, but I did on X. Go follow me, Wake Up with Wops. Retail has been showing relative strength lately. While the market's been pulling back, you can see here, retail did pull back with the market, but held the 50-day average, and it's looking pretty strong to continue and breaking out of this range and continue going up. So I like it. Entered into Macy's, and Macy's is doing good. Remounted the 50-day average on Friday. A lot of green days, so there might be some consolidation ahead. Or if we get a pop on Monday, I'll probably just take my profits on this. Deck, another retail store. It's a apparel footwear. I usually like to be diversified. I entered into two retail stocks at the same time just because it's two different setups. You could say Macy's is like a pullback continuation to continue the uptrend, and Deck is a earnings breakout. So it had earnings right here on this day, gapped up like 20 to 30%. It's pulled back orderly, and when it pulled back, it's on low volume. And then you can see held that 9 EMA. I entered on this red candle. It looked like I was going to get shaken out. It got a little bit close to my stop loss, but the 9 EMA came in, held the support, and now we're looking good to reach our target. This is a breakout pullback to the 9 EMA. I love this. And it's also breaking the 200-day average, which is our long-term trend. Lastly, Google. It had earnings and it gapped down on earnings. It was strong numbers. You can see here when you click on the E, it beat on earnings and it still gapped down in pre-market and the open. But throughout the day, buyers stepped in and fully bought it up, kind of doing like an intraday reversal and right at the 50-day average. On Friday, it kind of dipped down a little bit. You can see it's the only red position, but it's still above the 50-day average, holding that. It's like an inside day. It's still bullish in my eyes for Google. Now let's go over 10 stocks, 10 trade ideas. Let's look how it opens on Monday, but these could probably all be entered. Starting off with Rocket Lab. This is aerospace and defense. You can see how hot this sector's been just on a roll. If we go to the ETF XAR for aerospace and defense, you can see it's been very hot to start January. It's pulled back and now kind of held that 50-day average. Really love Rocket Lab. Held the 50-day Friday, it closed above. You could probably enter on Monday depending on the open. Put your stop loss a little bit below this low and then target the high. I'm really liking this. And then you get exposed to the aerospace defense sector. Celsius, this one's pretty cool. You can see here it's pulled back and held the 200-day average, and the 50-day average is right below the candle, curling up. The only thing about this, you have that 9 EMA and 20-day average as resistance around like 53 bucks. But if we break that, I'm really liking that to reach the top of this range or even more. You can see here it's been pretty hot. Kind of respected that 200-day average. Broke out, went down a little bit, but respected it, and now we're back above, holding it. I'm liking that for a shot. AEHR, we've talked about this before when it was breaking out of the downtrend. It's pulled back and now it's holding, closing above the 9 EMA. I'm liking that. TSM, these are your semiconductors, Taiwan semiconductor, breaking out of this like flag, or it's about to break out. You could probably anticipate it. Wait, maybe it's a little bit extended, maybe wait for some consolidation or a little bit pull back to the moving averages, let them catch up. And I think a break for TSM is going to happen. Semiconductors are hot. AVGO, another semiconductor, holding that 200-day average and closed above the 9 EMA and the 20-day average. Looks like it's been oversold too since this earnings. Just going down, tested that 200-day average. It might be a good spot. Put it on your IRA, your retirement accounts, your savings, and just hold for a while. I think we get back to 412 in 2026. Speaking of semiconductors, SMH, you're gonna see pulling back because of this strong move. It had a strong move in January and then pulled back with the market, but held that 50-day average. And I actually took a shot on this. It was a 1-day trade. I posted it on X. I didn't talk about it on YouTube. I didn't have time. I entered into SOXL, which is basically the ETF for semiconductors, just 3x leverage. So it was a 15% return in 1 day. I entered when it held the 50-day average, and then it closed above here. So we entered around, I think, 52 bucks, sold at 62. It was just perfect play right there. 1 day, talking about the semiconductors. Now, NBIS pulled back to the 200-day average. It's holding. You have the 9 EMA. You wanted to remount that level, but I like that anticipation play here. Tesla been oversold. You can see here from up Bollinger Band to the lower Bollinger Band, holding the 200-day average. I'm liking this as an oversold play and probably anticipate a move to the highs. Another oversold trade idea is HIMS. You can see, look at this downtrend it's been in. Very, very brutal. If you're bullish on this stock, I think it's a good time to enter. You put your stop loss right there so you have a defined risk, and then you could target whatever you want. It's looking very oversold. If we open up the stochastics, you're going to see here below 20 at a 10-13 reading. So yes, oversold just like Tesla. Another oversold one is Roblox. Put your stop loss under the last low. It's closed above the 9 EMA. I'm really liking this. This has been getting hit pretty hard. We were looking at Roblox earlier when it broke out back in July of 2025, and then since then, just on a downtrend. But it could be rebounding now. Low stochastics. And lastly, Boeing. Transportation has been doing good, but Boeing is not transportation. It's aerospace and defense. But I believe it has a little bit of exposure to transportation, like airlines and everything, because all those planes are Boeings. Now you can see here, broke out back in December and early January, pulled back and now remounting the 9 EMA and 20-day average. Typical continuation pattern. You have the moving averages curling up. I'm really liking this. You can put your stop loss under this range, target the top. And then if we go on the weekly, you're going to see here that once it breaks out of this range, I think Boeing's going to be pretty hot. You still have the high over here on 445 that happened back in February of 2019. So breaking this will be a good base, a 4-year base. See, since 2020, or more than 4 years. That's a 6-year base that's happening right now. And if when it breaks out of that, you are gonna see Boeing rip. And that's it, guys. Just a stock review, weekend review. Peace.